Welcome to Second Take, the show that focuses on the issues behind the news. Mining Weekly editor Martin Creamer joins me today to discuss the gold industry, Transnet Saldanha iron ore line, and investment in Botswana. Welcome, Martin.
Hi, Sashni.
Now, a recent media article has said that South Africa's gold industry was entering its final phase of slow death.
Yes, it was Bloomberg, interviewing Goldfields, which is in the throes of a terrible crisis there. The strike is going on and on. It sort of baffles me because that's a fantastic ore body there. It's not like the normal mine at South Deep. It's like a very big cavernous arrangement, taller than a double-decker bus, and normally the people that work in there get well paid because it's all totally mechanized, but these workers are on strike at the moment. And I think against that background, Goldfields was speaking to Bloomberg and saying, if you do the mathematics, gold is in serious decline. And I think I've seen a lot of graphs from Minerals Council South Africa showing a very quick downward surge of gold production. Now, that is based, I'm sure, on a number of factors, including the depth to which the mines are going, the gold price not being as good as it should be, and the fact that, your productivity is low because you're now dealing with a labor force that actually wants more from this. It's a dangerous job. You can get killed, and they're saying, look, we want to be paid at a proper amount. And sometimes that amount might not measure up to profitability. So the story is, look, we're in serious decline with gold. But if you see a lot of the comments that came onto our site immediately after that, people were saying, hey, come on, let's just work out how much gold we've mined so far in the last 130 years or so. And you'll see that the argument is that we've still got as much gold in the ground as we have mined. So this one comment was South Africa produced 43,000 tons of gold during the last 100 years, and there's at least still another 43,000 tons of gold reserves left. So what the story is that the gold is there, but it's not economic to go and get. That can change very rapidly. If that gold price lifts to a level that makes exploring more positive, and if technology arrives that is quick and mines differently, it's going to change that whole picture. It's good to know that people are convinced, and we're all convinced that the reserves are there. Certain areas of the watershed haven't been mined, like the Botswana Gap, the Potchefstroom Gap, because people have said the gold there is too deep. But if technology changes and the gold price changes, they could be saying, no, we've still got plenty of gold, which will be a nice message.
And Transnet has gotten praise for restoring its Saldanha iron ore line.
Yeah, I was very pleased with what Transnet did. It showed a strong, conscientious attitude that we might not have seen before. What happened is, and it's the second time it's happened along that line, in the roads that lead under the iron ore line that goes from Sishen to Saldanha over 800 kilometers, you have vehicles passing. And in two cases, trucks have passed, and they have been loaded at a height that exceeds the legal limit on a public road, and they've smashed into these bridges. They must have been traveling at high speed, these trucks, because this particular bridge became smashed beyond repair. Now that is very serious for South Africa because the earnings potential of that line are huge. And what Transnet did this time around, it collaborated with everybody to say, let's get this thing back up as fast as we can. And people were estimating like a month, and the rapidness of the return, was in 7 days, I think, that they managed to get this back up after they put their mind to it. Because they actually had a spare bridge, or parts of a spare bridge, which they brought in to put there. And I think this sort of conscientiousness we should show throughout South Africa. We've had a lot of derailments along that line. 6 last year, people had to declare force majeure. That means that, look, I can't do what I'm supposed to do. So, whatever I'm due to deliver somewhere, it can't be delivered. They give that warning because of the derailments. And that particular derailment, we complained because we said, look, Transnet should let the nation know. They shouldn't just keep quiet about these things. Well, they certainly didn't keep quiet about this one, because I think it was one which first they did report it, and then they came back very strongly to say the trains were going back over there last Friday, although they had to go a little bit slower than usual, I think 30 kilometers, but still, the person who did a few sums said by cutting off days which they thought they would need to repair, they actually saved the country something like 900 million rand in foreign exchange. So it shows you the earnings potential of that line. It's got to keep going. I don't know what they're going to do about these trucks riding into it. I think that's terrible. But hopefully this will give a warning.
And lastly, just talk to us about a recent advertisement which is calling for investment into Botswana.
Yeah, this advertisement appeared in The Economist of London. And so obviously Botswana is now looking out very seriously for foreign direct investment. And, you know, they're right next door to us, and they've got a much better investment case. They're able to say, you know, we actually can provide electricity to a market of like 292 million people in the South African development community. So, you know, if you mining coal there, or even if you are producing electricity from the sun, you know, you've got a big market to feed there, a big potential market. And they're saying, you know, no foreign exchange, so you can bring your money in, bring your money out, there's no restriction. And they're talking about the tax at 15%, you know, which again puts South Africa in a tough position. Duty-free imports, if you're doing something, you're building something there that you've got approval for, you don't pay duty on the equipment and whatever you bring in. So they've got a good investment case. And I'm sure if people are sitting outside the country and deciding, hey, am I going to invest in South Africa or am I going to invest in Botswana, they're going to look very favorably in Botswana because it rates high on all these indexes, whereas we don't. And, you know, the fact that we don't is our own bad doing. Surely we have got to think of, you know, the small little children going to school, our whole community here, how we're denying these people opportunities because we've got no strong political will to make ourselves attractive and investor friendly when our next door neighbors do it. And you can see Namibia is doing it. You know, they're getting investment, and I can tell you that I know of South Africans who were mining coal in South Africa, who left South Africa, they're now mining coal in Botswana, and they're going to supply South Africa. They're going to supply, you know, cement plants, they're going to supply breweries with coal, taking it over the border. So the market is there in South Africa, but the opportunity to actually get some return on your investment is better next door, not many miles away. And I think that South Africans should look at themselves in the mirror and say, you know, come on, we've got to be competitive. We can't let other countries around us in this customs union, because they can come through the borders, look so much better. And let it be a message, these ads, and they're flighting them, you know, in the mass media and in media internationally, that could win them attract them quite a bit of investment. We should be doing the same. We should be trying to compete.
Thanks for speaking with us, Martin.
It's a great pleasure, Sashni.
That's it for today. Join us again next year for more news analysis on the local and global mining industries.